This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on another fresh edition of Bazaar Morning Call. We're starting a fresh new week, Monday morning. The skies have darkened over Mumbai. I think that's the big headline that we're going to talk about here over the next 2 hours or so. Monsoon rains. I am Prashant. With me, my colleague Sonia and Nigel. Guys, hi, morning.
Hi,
morning.
Good morning. It sounds so ominous, when you say that. It's actually such a pleasant sight, right, to wake up to the monsoons. And of course, it was really stormy Sunday. I mean, you had all those cyclonic feelings. But then the IMD coming out and saying that the monsoons have begun officially. The progress is good. It's my favorite time of the year. I don't know about you guys.
Well, I'm going to... I'll discuss this later, but I'm going to be somewhere during rains to experience rains, monsoon rains. So my favorite time of the year as well. This part of the country, absolutely.
But what a fantastic weekend, right? Sporting weekend. Djokovic, supreme. I mean, that semi-final that we look forward to on Friday, it didn't disappoint for the first two sets, but Djokovic, I mean, in a league of its own, and the cricket action, I think we'll keep that on the back burner.
When you said amazing weekend, I was just thinking, okay.
Let's not talk about that.
Not too great in cricket.
French Open was...
The French Open, I caught the first two sets purely by chance. And then I had to go out. And then I was getting scores on my phone. And it was nothing. I mean, the first two sets basically was the match. And then the next two sets went on very, very quickly in the next 1 hour or so. And then, of course, the final was... I don't think anyone really expected Casper Ruud to win.
Yeah.
It was all Djokovic all the ways. And that's essentially what has happened. 23rd.
23rd in an era where you have Federer, and yet you get 23 Grand Slams. I mean, it's Nadal and Federer in the same era, and yet you're winning 23 Grand Slams. Kudos to that.
Two more than Federer, one more than Nadal. So it's quite something. Well, we've got lots to tackle. It's a new week, and let's sort of get you up to date with what you need to know as we start another new session. So we are coming off after 2 days, that is Thursday and last Friday, which saw some pullbacks. I mean, the pullbacks were not large, 1 to 1.5%. This comes on the back of a very, very feverish rally that we had in the past few weeks or so. So some amount of pullback is what we've seen. Just to put the feverish rally in context, in the last 2 months, including this Thursday and Friday sessions, the mid-cap index is up 17%, the small-cap index is up 20% or so. So it's been very, very good going, and sometimes you do get, things starting to slow a little bit, which we saw. Global session is nothing to talk about on Friday. The Nasdaq was up about 0.16%. By the way, technically, the Nasdaq composite, that is above the August 2022 highs. So purely going by charts, there are more upsides coming, even for the Nasdaq. But we'll leave that for a later time. The big cue, which will set the tone going forward, is the consumer price inflation number. It's the final key trigger before the FOMC. And the FOMC, in terms of market pricing, is basically a coin toss, 50-50. Enough number of people expecting a pause, and on the other side, enough expecting another 25 basis point hike as well. I mean, it's actually not really clear. Maybe the CPI number will give us the final clue. So CPI is on Tuesday, and then FOMC comes up on Wednesday, which means that for us, the Fed reaction will be on Thursday morning. As always, I mean, decisions usually come on Wednesdays. So that's the cue. Maybe, the global markets also perhaps go into a bit of a holding pattern before we, till the time we finally get the decision. So this is the really important one you need to watch out for. On the Nifty, the support levels are about 100 points away from where we left off on Friday. We left off at 18,563. The important supports come in at 18,464 to 18,500 kind of zone. The very near-term support level, this is the number we put out last Friday as well. SGX, by the way, is indicating a higher start. I'll get to that in just a bit. But on the upside, Thursday's high, it's a bit of a swing high. 18,778 is the number which needs to be crossed for, eyes on the all-time high level, which, of course, has been elusive so far. The Bank Nifty closed exactly at the 20-day moving average. 2 points off the 20-day moving average on Friday. It's had several touch points of the 20, but so far it's defended it. So the support is at the 20, which is 43,987. We closed at 43,989. That's how close. And then after that, the swing low of 43,706 will also come into picture. These are supports for the Nifty Bank. And on the way up, the Bank Nifty needs to take out, as we've been saying, 44,500, which is the swing high, which has not been able to over the last at least 2 weeks or so. So, that's the setup. Those are the levels you need to know as we start another session. The SGX will come up on your screen as well. It's indicative of a 70, 71 point start. I mean, I think after last 2 days of a price action, let's see if we do get the 70-point uptick. But if you do get, don't chase the move. Wait a little bit, at least watch the first hour or so. And it's happened so many times. The 70 point becomes 30, 20, 25 points, and then you get the move. So I think prudent to watch the first hour in terms of what the market wants to do, and then decide how to go in. You've got the levels in terms of near-term trading levels to watch out for. Sonia.
Oh, absolutely. And every time the monsoons begin, the market sort of gets into the green. I mean, it's great, right, for the economy, for earnings, for crop price, for crop output, etc. So this is, of course, a big cue that the market is watching as we begin trade this week. The monsoons have now entered Maharashtra, and the IMD said that the progress is quite satisfactory in terms of the initial tick on the monsoon. So that's a big positive. A lot of events stacked up, as we were telling you. There's, of course, all eyes will be on the US FOMC policy that begins tomorrow, the outcome of which will be known on the 14th of June. There's a pause this time around, so not too much expected over there. There's the ECB meet on Thursday, and there's the Bank of Japan meeting that concludes on Friday. So it is a hectic week in terms of central bank meetings. So we'll keep our eye out on that. Apart from that, the US markets have actually had a good run. Of course, on Friday, they closed absolutely flat in anticipation of the inflation data and the US Fed outcome. But in general, the S&P 500 posted its fourth straight week of gains. The Dow has been trending higher. So in that context, Wall Street has been doing pretty well. For our own markets, this 18,600 level has proven to be a bit of a sticky zone for a while. We closed lower on Friday as well. Foreign investors sold about 300 crores in the cash markets, while DI has bought about 1,245 odd crores. Now, a couple of things. The mid-caps continue to be in focus. CLSA put out a note, and we'll talk about that in greater detail, where they said that there's a further 13-14% increase that they're expecting after the recent breakout that the mid-cap index has seen. So keep your eyes peeled on that end of the market. And in terms of local cues to track, there is the April IIP and the May CPI data that comes out at 5:30 p.m. in the evening. So those are the macro factors. By the way, talking about macro cues, as far as the Fed outcome is concerned, Nomura put out a note where they said that the Fed's hawkish pause is something that is unlikely to dampen the market spirit. So there's a pause. It could be hawkish, but it's not going to affect the market needle too much. So in that context, a lot of things to watch out for. But today, just for today, the morning looks like it's going to be a good start.
Well, that's right, Sonia. And with the onset of the monsoon, besides all the factors that you mentioned, it's good for the economy, good for prices, etc. It was getting too hot, so I'm quite happy to see the monsoon. So let's hope that picks up as well. But in terms of the Nifty, well, we have been consolidating in a bit of a range, which is okay. And we've come off a little bit from the top, but we're holding on to the 20 DMA. So I'll say that, in fact, that uptrend is pretty much well and truly on. Global markets are in wait and watch mode. We have the big Fed outcome that we'll get in the next couple of days, so we'll wait for that. But the positive news, at least overnight, is the dollar index. It's a little bit weaker than what it was on Friday. And also we had crude oil prices that came down a little bit to around $74 per barrel. Those two are tailwinds from an Indian market equity perspective. What happened in Friday's trading session? There was some unwinding of long positions, both on the Nifty and the Nifty Bank. It perfectly ties in with what happened with regard to the FI data as well. The unwound closed on 7,000 long positions. Now the short positioning has moved around 54%. Getting into the event, you like the short positioning to go up, because if the Fed governor, if he delivers what is expected, maybe you have enough ingredients in there for a bit of a short covering bounce. On the index option side, the FIs are buying more calls than puts, but they're writing calls. So telling you at higher levels, they're expecting to see some bit of supply that comes in there. So let's pull up a couple of those strikes. 18,600, 18,700 call, both of them, between them, they added close to around a crore shares on. So there was aggressive writing being seen at those levels. And if you're pulling up the 18,700 call as well as put, you'll see that there are way more number of calls that are written in comparison to puts. So the markets are not expecting us to get above that 18,750 odd mark. Any kind of positive news comes in there, that'll get, the bears will get surprised on the positive side. Let's focus on the PCR. A few sessions ago, we were talking about the PCR moving to the upper end of the band of around 1.4. And we see the markets come off normally when we move to the upper end of the band. Now we're closer to the lower end of the band. So that's why buying the dip will be something that, you could look at for today's trading session itself. Let's pull up the levels you're looking at. The 20-day MA, that's a line in the sand, 18,450. Till we hold on to that level, you're saying that those all-time highs, they're within kissing distance, and we should get them. Resistance levels is from where we did a U-turn last week. The Nifty Bank, it closed at the 20-day MA pat out there. Last 10 sessions, it's been in this range of close to around 700 points. The lower level that we're looking at is 43,700 because that's the lowest level we've seen in the last 10 sessions. The 20-day MA, that's where we are at. So the SGX, if we're suggesting a 70-point gap up, I think that's a no-trade zone. But intraday, you could look to buy the dip, hold on to that 20-day MA as your support zone or your stop loss and hope that the markets rebound from there. But don't chase the gap up is the advice that's coming in today.
Right, well, before we go any further, let's quickly tell you what's lined up in the first half hour of the show. We get you updates from across the globe. Lawrence Blanco of CLSA will be making an appearance, in a bit from now to discuss levels, mid-caps. That's the big call from Lawrence. Our research team will get you CNBC-TV18's list of top 10 stocks for the day. At 8:30, we do a fundamental stock analysis. Prakash Devan will be helping us with that in just a bit.
All right, well, let's get you some views then on the market. We begin first with Chetan Seth of Nomura, who says that the Fed's hawkish pause is unlikely to dampen the market sentiment. Recent negativity towards China should ease, given rising expectations of some property sector easing, PBOC rate cuts, and the US Secretary Blinken's visit to China. Our poll questions during the recent Nomura Investment Forum Asia conference threw interesting results. In India, 41% of investors think of the upcoming elections as the biggest source of uncertainty for Indian stocks, and only 5% polled no concerns.
Okay, let's get you some money market views as well. And the rupee B. Prasanna of ICICI Bank says the worry about a renewed inflationary trend resurfaced with rates repriced higher after Bank of Canada resumed hiking rates after a 5-month pause. Dollar shed some strength as softer weekly labor data in the US and recent commentary from officials indicate a pause in the upcoming FOMC. FPI inflows and RBI's intervention have led to the rupee to trade in a range with an appreciation bias, even though weakness in Chinese yuan continues. Prasanna expects the pair to trade between 82.1 to 82.90 to the dollar range this week.
All right, and on the bonds, B. Prasanna says that the global bond yields inched higher as continued strong economic prints led to further impetus to the risk of a hawkish outlook and at least one more hike from the Fed. The RBI's MPC2 surprised markets by a hawkish pause, resulting in local bond yields moving higher. Inflation for both US and India is expected to soften this week. However, expect the markets to trade cautiously given a continued supply and expected decline in systemic liquidity. He expects the 10-year benchmark to trade in a range of 6.95 to 7.1%.
To track for you, and we get to that in just a bit in greater detail. But for the time being, let's list out all the stocks we're tracking for you. JSW Steel, Tata Steel, Lupin, Maharashtra Seamless, Lloyd Steel. You have Titagarh Wagons, Kochi Shipyard. Their stocks on the back of positive news flow. On the flip side, you have Divi's Laboratory, Loris, as well as Go Fashion that could be reacting to negative news flow.
Okay, well, those are stocks on your radar, on our radar as well. Lawrence Blanco of CLSA is now joining in to talk levels and his big call. Lawrence, great to have you with us here. Good morning. You're saying in your latest note that while the Nifty is likely to be ranged, for the mid-cap index, you are seeing and projecting, much greater gains. Could you explain what you're seeing on the mid-cap index straight away, Lawrence?
Yeah, I mean, there's two things. First is if you look at the absolute price action for the Nifty mid-caps, this is the first of the key indices that we track in India that's cleared through the highs that you made back into 2021 as well as 2022. So we've got a sort of confirmed breakouts with the momentum indicators rising with that. So we think at a minimum we've got 13% upside, but we have upside targets extending towards sort of 24% type gain. So we think that that's an important breakout that we've seen in the broader market. And then if you're looking at the mid-cap index relative to the top 50 stocks, you've seen that relative price action breakout of a 18-month consolidation pattern. So basically, it just has the mid-caps as the leading part of the Indian market to the upside. And that's where we think investors should focus for outperformance going forward.
Okay, so mid-caps are now a leading part of the Indian market, and viewers and, traders, investors should focus on that area. Got it. Lawrence, hi, good morning. Where does the Nifty stand? Because this 18,600 mark has proven to be a bit of a resistance for a while. Are you seeing that get taken out anytime soon?
We think ultimately it will be taken out. But if we look at in the near term, so talking over about a month to 2 months, we've got the Indian bank sector, which is testing its highs from late 22, and we've seen some slowing upside there. So looking for a bit of a pause in the Indian banks. And then if you look at the other large cap sector being the IT sector, that's still in the trading range post last year's 30% decline. So taking those two major sectors into account, it looks like the Nifty will battle to get through this 18,800 area in the short term. So look for more of a consolidation pattern there while mid-caps continue to gain the attention.
All right. Hi, Lawrence. Good morning. What about individual stocks and sectors? I recall you were quite bullish on SBI on the charts earlier, and also on the real estate index, if I got that correct. Anything else you're looking at in terms of stocks or sectors here in India?
Yeah, so just remember the Nifty banks is one of our key sectors for the long-term leadership within the Indian market. But as I just mentioned earlier, in the short term, we have seen the Nifty banks advance off the lows from earlier this year, stalling at resistance currently. So we're seeing a bit of a pause. We still like the longer-term setup of State Bank of India. But in the very near term, both SBI as well as the Nifty banks indexes expected to do a bit of time consolidating the gains that we've seen there before we get a fresh breakout. Longer term, though, that's a sector that we think remains leadership. And yes, we have seen some important breakouts on the property side. Not that it's a major weighting within the broader market, but that's another sector where we see we can get leadership from on a longer term basis.
Right. Real estate continues to be on your radar. Lawrence, within mid-caps, talk to us about, say, 4 or 5 top ideas there where you're seeing these breakouts, which will lead the mid-cap index up, 13% first, and as you said, 24% off, in total. Go on.
Yeah, I have to talk about sector specifics rather than individual stocks. So, if you break it down, there's a lot of autos within the mid-cap space that we've seen breakouts and some leadership there, and some of the financial services which have lagged. We're getting some breakouts from those two. So if I'm looking at subsectors within mid-caps, the autos and the financial services is where we're getting new breakouts that has leadership within the mid-cap space.
Okay, so autos and financial services is where you said there is leadership in the mid-cap space. Got it. And from the frontliners, although we might be in this range for a while and there could be perhaps what people are calling a time-wise correction, where do you see the outperformance come through from in terms of sectors? You spoke briefly about how banks and IT are still lagging behind a bit, but any other pockets where you see an outperformance come through?
Yeah, so just to be clear, banks on the longer term side, we think is a key leader for the Nifty itself. And to get through the 18,800 area, we think that will be led by an ultimate breakout in the bank sector. But we don't think that happens in the short term focus on the mid-cap space. We don't think IT will be a driver to the upside. We see that more of a range-bound sector. We've mentioned property. That's another sector where we can see some leadership coming from at the end of the day. And on the other side of that, a sector to continue to avoid, we think, is the pharmaceutical space, which at best is range-bound. So that's how I'd sort of square it up, looking at underlying sectors for the market.
All right, Lawrence, what about the mother market, the US market? We're seeing broadening of the rally, which could be good news for the US investors. But we out here look at the headline index, and we get some leadership from there. How do you see, say, the NASDAQ perform? It's been a big performer. I think it's up close to around 25-30% in the last 1 year or so. What's the level you're looking at out there, the NASDAQ, the Dow Jones, if any levels on both of them?
Yeah, so the NASDAQ, we're basically looking at the February and March 2022 highs as a next resistance zone, which I think is up at the 15,300 to 15,500 area. In the short term, though, we are starting to see some signs of fatigue. For the NASDAQ's move, we had a bearish engulfing day last week, and what that means is, you open at the highs, but you closed at the session's lows, which gives an indication that you've seen a build-up in selling pressure after that initial high. So look for a bit of a pause and a pullback. But we see that 50 days a key support for the NASDAQ's uptrend. But like I said earlier, I think the interesting piece of action in the US over the past 10 sessions has basically been this rotation into laggards. So you've seen Russell 2000, but more importantly, you've seen some stability in financials, industrials, and the metals and mining sides. And getting some stability in those sectors has actually seen the breadth indicators improve. To give you an idea, 2 weeks ago, we had the percentage of stocks above their 10-day moving average sitting around 25%, and that's now moved up sharply towards the 88% area. So you can see how just some other sectors starting to participate, how those breadth readings can improve quickly over a short space of time. And I think that does improve the support levels for the market and also the uptrend that we've seen currently play out.
Lawrence, just one last question before we let you go. You said in the mid-cap space, autos is something that you like. Does that hold true for the frontliners as well? I ask because, this year, the biggest gainers have been the likes of Tata Motors, up almost 50%. Is there more to go in such names?
Well, again, I would focus in on the mid-cap names rather than the large-cap leadership names, which have led this year. So, again, I think the mid-cap auto names should start to outperform the large cap names as they pause and consolidate the gains that they've made this year. So again, look down to the mid-cap names for that leadership in the short term at least.
All right. Lawrence, this call on mid-caps and the ranged price action for the Nifty, this should play out over what period of time? And I mean, beyond this, what's your prognosis? Slightly looking ahead.
Well, again, if we just take it at the broader Nifty.
Okay. I think we have the line.
We think this trading range does start, and we've talked about targets of 21,000 and more for the Nifty itself. I mean, the time horizons are always tricky, but if you look at the rotation that we've seen between sectors globally and within the local market, they typically last between 1 to 2 quarters, and then you start to see the reverse rotation occur from that. So the current mid-cap side, we think, is leadership for at least a quarter, if not 2 quarters, before the Nifty can break out of its trading range.
All right. Fair enough. Thanks very much, Lawrence. Great speaking with you here on CNBC-TV18. It's a pleasure to hear your thoughts. Well, mid-caps will continue to rally even for the time being in the near term. A quarter, as Lawrence pointed out, in terms of time frames, the Nifty remains ranged. We'll take a quick commercial break here. We are back. Our top stocks to watch out for with our research team coming up in just a bit.
Welcome back. You're tuned into Bazaar Morning Call here on CNBC-TV18. Well, as promised, our research team is standing by with all the top stocks that you need to track. Morning, guys. I'll go first, though I'm tracking a few of the steel companies. JSW Steel, Tata Steel, and if you're looking at smaller names, Vardhman Special Steel as well as Kalyani Steel. The reason we're looking at these names is because they have exposure to the auto sector. And over the weekend, Steel Mint, well, there were reports that indicated that the auto contracts have been revised upwards for the first quarter of this fiscal. Remember, it happens with a bit of a lag. So towards the end of the quarter, we have got that revision, which they will gain for this past quarter. That is for the quarter one, the one that we are in. On HRC, prices are up by around 3 to around 3,500. On CRC, it's up between 4 to around 4,500 odd. Just keep in mind, the last couple of revisions were on the downward trajectory. So after nearly around 12 months, you're getting an upward revision. Some part of the street, obviously, they're expecting it. We have not yet verified these rates individually, but this is good news. For Tata as well as JSW Steel, very roughly around 15% of their sale volumes will be towards the auto space. While for the other couple of names, that's Kalyani Steel and Vardhman Special Steel, all their steel, almost all their steel goes to autos, so they will gain as well. But Ekta is joining in to tell us about the pharma space. And Ekta, pharma export data not looking too good for a couple of companies?
Well, yes. I'll start with the positive news. The likes of Lupin as well as Syngene for the month of May have shown strong export data. So Lupin, $67 million for the month of May versus $41 million month on month. Syngene also has done better, probably on the back of their animal drug, which they have been supplying. So that has aided. Divi's Labs Q1 quarter to date, it looks weak, 89 million versus 199 million Q on Q versus $250 million year on year. One of their key drugs has shown little amount of shipments Q1 FY24 Q to date, which is around 3 million versus 37 million Q on Q. So let's see how the data plays out, because it tends to be a little lumpy and, companies tend to make it up as well. But based on this, even Laurus Labs looks to be a bit weak. But remember that they had Paxlovid data same time last year. So that is something that you need to account for. Gland Pharma, 37 million versus 82 million Q on Q and versus 80 million on a year-on-year basis. That too is looking a bit sluggish. So I expect probably Divi's, Laurus and Gland to be in the red, but maybe Lupin and Syngene to be in the green.
All right, Ekta, thanks a lot for that. Well, let's go across to Vivek now. He's tracking Go Fashion this morning. Vivek, how is it looking?
Well, good morning. What we understand from our sources is that, there could be a very large block deal in Go Fashion today. We understand that Sequoia Capital is looking to sell its entire 10.1% stake in the company via the block deal route. We accessed the term sheet and we understand that the floor price for this particular block would be at 1,135 rupees a share, which is a 5% discount to Friday's closing. So the total size of the block could be around 624 crore, at that particular price. Expect some red on the stock on the back of the very large equity offering that we are likely to see today.
Okay, all right, Vivek, thanks a lot for that. Well, we're tracking a couple of more companies. Maharashtra Seamless, they have voluntarily gone ahead and repaid some part of their long-term loan to the tune of around 230 crores. Remember, we spoke to them just last week. They have a big order book in their strong liquidity position. So that's why they've gone ahead and made this prepayment. As it is, they were a net cash company. So maybe this is just the long-term repayment that they have made. Lloyd Steel, that's the other one we're looking at. In the next couple of days, they're going to be having a board meeting. They're going to be considering issuance of shares or also convertible bonds or debentures. So we're going with green on both these two stocks. But back to Vivek. Vivek, you're tracking a couple of more names. Tell us more.
Well, absolutely. A couple of names on the radar. First on my list, Titagar Rail Systems, earlier Titagar Wagons. Company is looking to raise funds. They've chosen the route of a preferential issue, and they're looking to raise almost 288 crore from Small Cap World Fund at 380 rupees a share. Other one on our radar is Cochin Shipyard. Some more positive news flow coming in. Company has been declared as the lowest bidder, or L1, by the Indian Navy. This is for an upgrade of an Indian naval ship. Contract size of 300 crore. Estimated duration of the project is close to 24 months. Lastly, Avental, a smaller name, we don't discuss it much, but an important contract win that has come in for the company. An order worth 54 crore. This is coming from the Ministry of Defence. This is for development of SATCOM terminals as well as hub stations.
Okay, well, Vivek, thanks very much for that. Quick recap of stocks, and these are stocks first with positive news flow. This is JSW Steel, Tata Steel, Lupin, Maharashtra Seamless, Lloyd Steel, Titagar Wagons and Cochin Shipyard, while stocks with negative news flow, Divi's, Laurus and Go Fashion. So that's basically what you need to watch out for. We'll come back to some of these stocks with our experts in a bit from now. Manisha is here with all the roundup from the world of commodities. Manisha, hi, good morning.
Morning. Thank you for that, Prashant. I'll start with the crude oil prices, which have seen a decline for a second straight week. And this week as well hasn't started on a very positive note. We are trading below $70 a barrel for the WTI crude prices. And prices have continued to stay below 80 despite Saudi cuts, especially for the Brent as well. So we have seen rise in U.S. fuel stocks, the disappointing China data where the May factory gate prices fell at the fastest pace in 7 years continue to weigh on. Same is the case with the metals prices also, trading very flat in the Asian markets right now, looking for cues, of course, from the US Fed meeting. You have the European Central Bank meeting and Bank of Japan, all three major central banks meeting in this week, the monetary policies, that is. Ahead of that, while we have the dollar index trading below 104, but that also has not been able to support the metals in any case. The only thing that seems to be trading in positive right now is gold, which we have seen put in a second weekly gain in the previous one. Silver is trading at around 2-month highs right now, but apart from that, very choppy trades and lesser volumes as well.
Thanks a lot, Manisha, for that. Have a good day. We'll come back to you later at about 10 a.m. Let's slip into a quick break. On the other side, Prakash Diwan will join in for a discussion on the markets and all the stocks that are in focus. Stay tuned. We'll also be connecting with Anthony Lang of Sonata Software for a discussion on the impact of the recent guidance revision by EPAM and also the outlook for their business going forward. Stay tuned. Welcome back to the show. Let's invite Prakash Diwan on our show now to tell us about all the stocks that we need to watch out for as we head into a brand new week of trade. Prakash, hi, good morning. You know, we were just speaking to Lawrence Belanco of CLSA and he mentioned that there is a further upside of 15% that he's looking at in the mid-cap space after the breakout that we've seen in the last fortnight. If that takes place, then which are the stocks that one can look to buy now where there is both perhaps valuation as well as growth headroom?
Good morning, Sonia. So, you know, I don't have a ready list, to be honest, for this answer, but I do agree that the kind of reset that most of these mid-caps, especially the quality names, are undergoing, given the earnings, strength, that's likely to propel, as you rightly said, you know, a softness in valuation, given the fact that the E is growing in that PE, and very clearly, you know, visibility of earnings is getting stronger. I'll make it easier by at least listing out the fact that there's some of these very clear pockets of promise that seem to be emerging after the numbers have been digested. So, you know, you have cap goods, ancillaries within the cap goods, which is downstream businesses, not the likes of L&T and KEC and all, but I'm saying equipment manufacturers, suppliers of critical equipment. Then you have a lot happening on the renewable side. You know, so that's another area that is getting revved up very clearly. And then, of course, auto ancillaries, which is one of my favorite pockets to look at. Now, we've been seeing this whole emergence of OEMs, re-emergence of OEMs getting the strength from the demand side and the supply, pressure easing on the chip shortage and all. Now, if that were to actually continue playing out, and which I think it would, you'll probably see a lot of the good names which are under-discovered of sorts do well. So some of the good names that are very well known. So one of them is Motherson. I'm not talking about the global business. I'm talking about the India harness business. I've been talking about that, how it will start playing a very critical role in terms of percentage of contribution to the electric vehicles, while the IC engine vehicles also continue to attract a lot of revenue generation for them. The other name that I've seen in recent times, and the last con call was so clear, is a company called Uniparts India. I mean, it's a very unique business because it supplies a lot of critical assemblies, sub-assemblies to off-road, equipment, whether it's in defense, it's in agri, construction. So, these are businesses that are hitherto under-discovered of sorts. Sonia, what's going to be very critical is if you have the patience to hold on to some of these businesses which have come into, let's say, the public domain in the last few years, you will see the trajectory and the visibility of earnings getting more cemented. So that's what you'll have to do. But I do agree, the quality mid caps is where a lot of money will come in rather than chasing the Nifty stocks at an all-time high. Because there is hesitation very clearly given the volatility and the events around this. Particularly this week is too heavy on events. So I'm not too sure whether the Nifty will see moving the needle too much. But a lot of the mid caps will definitely see buying continue.
All right. Prakash, hi, good morning. Just wanted your names on IEX, which is down 20%, 22% in the last 2 days. And then CMS Info, I don't know if you track the stock. We had the management with us sounding very confident, but there was a large block and the stock ended about 6% lower. So quick thoughts, IEX and CMS.
So I'm not too familiar with the CMS infosystem, fundamentals at this point. But yes, IEX, of course, we've discussed this earlier also. There is no reason why there would be any let-up in the competitive intensity. I mean, there is this whole debate whether, the new regulations will kind of, put a lid on the kind of growth that IEX has. But I think, it's very simple. The coupling thing which we are worried about, or the market is worried about for IEX market share growth, is something which is a natural progression. I mean, you have more players now. There was a time when IEX didn't have any competition. So, from that stage, the government also realizes that you need, for a regime which is fair and equitable, you will need, regulation will support that. So I think IEX will face downward pressure. There are people who probably believe it could do very well even in that tough environment. But my belief is it will probably have to go down before it goes up.
All right, Prakash, I wanted your thoughts on Sonata Software, which has been one of the strongest stocks in the last 1 year. A year ago, Sonata Software was, I think, 450 rupees, and now it's 1,000 rupee plus. So let's do one thing. Let's get the management going first, and then we'll come to you. Now, there's a downward revision in guidance by global IT services player EPAM that happened last week, and that hurt a few IT stocks. Now, EPAM says that clients have become even more cautious with spending, and there is some reduction in the order pipeline. To discuss if this is having an impact on a company like Sonata Software, we have Anthony Lang, who is the global partner officer at Sonata Software, who joins us now. Anthony, thanks a lot for joining us. I just wanted your thoughts on how the demand situation is playing out, because the views that we've gotten from IT companies has been a bit mixed. Some of them have said that, yes, clients are deferring their orders. Some are saying there's not been too much of an impact. Your thoughts?
Yes, good morning, Sonia. Thank you for having me. What we see at Sonata is it's pretty consistent with what we've been saying about FY24 and the growth that we expect. We haven't seen a real slowdown in our pipeline and our large deals. Our large deals continue to be about 40% of our overall pipeline. And our customers continue to invest in the modernization services that Sonata offers, whether that's business application modernization, data modernization, those types of things. So from our perspective, it's pretty consistent about the guidance that we have given.
Would this mean that you would stay on track to achieve that $500 million goal that you shared earlier by FY26? Are we on track to do that?
Yes, we are, Sonia. That's the plan. And like I said, we see our quant acquisition is delivering strong synergy growth for our healthcare and life science and BFS verticals. And those are our two big invest verticals. So we're seeing a lot of data, AI related engagement, and synergy with quant. We're also seeing a lot of excitement with our partners and seeing strong pipeline growth in collaboration with our partners.
All right. Hi, Anthony. Good morning. So that $500 million is for the IT international business, right? For the overall business, you're looking at
That's
around
correct.
$1.5 billion by 2026 odd. In Q4, you'll briefly mention that a couple of your clients in the high-tech space, well, there was some bit of uncertainty out there, some slowdown. Has it picked up now? And are you expecting the second half of the year things to improve far more?
So I don't, from our perspective, the tech was a headwind for us as we were coming into the year. I think the tech industry has really sort of gone through a lot of that. And it seems like a lot of that, some of the things around some of the layoffs that they had and things like that, it seems like their business is starting to come back slowly. And we are expecting a strong Q3, Q4 with our tech clients.
Okay, all right. And also, Anthony, we had the management of Nasdaq who joined us a couple of days ago, and they said they're expecting the industry to grow in high single digits. Do you have a rough estimate about how do you see, say, mid-cap IT grow in the coming year, given the headwinds, given that all that's happening, taking everything into account, what would your rough number be in terms of an industry growth?
I'm not sure what the industry is going to grow at. Like, really what we're focused on is growing our business, right? And
Okay.
hitting our FY26 $500 million goals and our goals for FY24. And like I said, we're very positive about being able to do that. The management team's committed to our strategy and the effort that the team has put in. And we're really excited about the recognition we're getting in the industry for that.
Anthony, hi, good morning. The stock's up some 80% this year. It's just been really
It's been a good year so far.
Off the charts. I mean, apart from what we've discussed, I mean, is there something we're missing or the street is missing, or this is, the market's thumbs up, in your opinion, about what you put out as guidance?
In my opinion, I think we're really focused around four things that are really helping us drive our business, right? First is agility and being able to respond to our customers' needs very quickly. And second is our flexibility in the type of engagement models and approaches that we bring to our customers. And third is our focus on continuing to enhance our modernization services, doing a lot of investment in AI, which is driving a lot of business and opportunities and pipeline for us. And then I think fourth is the investment that we have made in our partnerships, right? And our specific co-sell activities we're doing with our partners, the investment in IP and next generation services.
Got it. So all fundamental drivers as you are laying it out. Anthony, just one, I want to go back to what you said, right? You're not seeing any slowdown, deal pipeline is pretty strong, etc. Is it possible that some of the larger players will see the effects of any potential slowdown first and then it'll trickle down to smaller players? Or you think, if there were to be a slowdown in demand, it'll show up everywhere at once? Just looking ahead.
Yeah, as we look ahead, like I said, we see Q3 and Q4 really being good and positive quarters for us. I think, here in the U.S., getting through the debt deal really helped. I think seeing tech sort of start to turn around in the market as well. And I think sticking with our fundamentals are really, creating opportunities for us with our clients and separating us from our competition.
Okay. Anthony, we leave it at that. Thanks a lot for joining in, and good to hear that there are no slowdown. There's no slowing down, especially for deals in your company. and you're on track to achieve that revenue guidance. Thanks a lot for being with us on the channel. Let's slip into a quick break. Before we do that, let me tell you what's lined up in the next half hour of the show. Anuj will be with us for a quick trade setup. Post that, we'll bring you the top stock picks for the day from our technical and F&O experts. And we also decode the stock rally in our Momentumizer segment. At 9:10, Nimesh will be there with the standout brokerage report of the day. And before the market opens in CNBC TV18 Stock Board, we will highlight all the top stocks to focus on for the day today. Stay tuned.
Welcome back. The SGX is indicative of a 60-point uptick. 18,673 is where that is going to start us at. Still 15 minutes to go, so things could moderate a bit more. It's moderated from the time that we first looked at it at 8 this morning. Anuj is here with a quick trade setup. Anuj, morning.
Morning, Prashant. Back in the range, of course, after the last 2 days. We lost about 200 points from Thursday morning. All-time high of 18,887. Now, of course, about 300 points away. But the market's not yet given reversal signs. Just buying some time, perhaps, ahead of some big data like the inflation data here and the Fed policy, of course. And large stocks have led this, though the broader market is still quite strong. Block deals are picking up, of course. That's also another data point to track. But the most important data, I think, is today evening, the the inflation data back home. It's seen to be dropping to 20 months low, which also reconfirms that, you know, the RBI's pause has been the right strategy. Of course, there's also the US data and the Fed meet, and 72% market participants now expect a pause from the Fed, which is also going to be a big cue. In terms of index, well, the first resistance zone is at 18,650 to 18,700, which is where it looks like we are going to open. And the bigger resistance is 18,700 to 800 from where we had slipped. The first support lies at 18,500 to 550, but my sense is this is a market which again perhaps wants to test the 20-day exponential moving average, which is placed at 18,443. It defended it twice in May. Let's see if we are third time lucky. On the Bank Nifty, we closed right at the 20-day moving average of 43,987, and the 20-day exponential moving average is placed at 43,873. Let's see if we can protect it, because that's something we have done all through the month of May and June. At least on a closing basis.
Okay, and finally the monsoons are here, right, Anuj? Big queue for the markets and lots of fun, especially if you're in Mumbai and you love trekking. Then great time.
Yeah, but this one right now is more of cyclone rains. I think the monsoon still has some time, I think.
In Mumbai, I think so. It was a cyclone, but the IMD has said that the progress in Maharashtra has been good so far. So
that's good to hear.
Fingers crossed.
Reached Ratnagiri, I think. It's slowly making its way.
Making its way here. All right. Thanks a lot for that, Anuj.
Okay, all right. Thanks, Anuj, for that. Well, let's get it back to Prakash Thiwan. Prakash, before we went into that break, we were having that chat with you about auto ancillaries. Now, we've got news over the weekend that after many, many quarters, some of these steel companies are getting a price increase from the auto sector. So if demand is good from the auto sector, then volumes will pick up. And now they've got a pricing tailwind, at least for the first quarter. From second quarter onwards is likely to be revised downwards yet again. How do you approach them? From what I know, JSW and Tata, from the large names, they have 15% exposure to autos. And from the smaller names, Kalyani as well as Vardhaman Specialty Steel.
Yeah.
Any view on any of these stocks?
Also, absolutely. In fact, Nigel, I'm glad you took this up because, even the kind of build-up that we are seeing in cap goods is finally leading to a lot of high-end engineering and EPC execution, which will involve a lot of steel demand, which is pent up. And while you have, the headwinds in the global market in terms of restocking, especially because China has not been able to rev up in that sense, it's going to be a very nice spot to be in. And let me tell you, steel is something which people have stayed away from in the last couple of quarters. But the likes of JSW Steel, of course, has the JFE vertical for auto, steel, specialized auto steel. But I would look at Tata Steel as a much more balanced, portfolio in that sense. Not just rely on a little bit of an uptick from the sector, from the auto ancillary sector. But overall, if you ask me, among the largest steel players and one of the safest names to go with, if you were to play this for the next couple of quarters, Tata Steel has a huge upside in the offing of sorts. It's a reset which will happen. It's a very clear risk reward that's kind of getting to be too favorable. So if any FI inflows continue to chase large caps, the non-ETF funds, the active funds, I don't see any reason why steel will not see a build-up, particularly Tata Steel at these valuations. So it's one of my favorites at this point in time from a tactical perspective, not necessarily, very long-term view because things would change dramatically in that sector. But at this point, a great balance sheet, pent-up demand, and the ability to continue supplying low-cost products to the rest of the world is what Tata Steel offers.
All right. Well, just stay on, Prakash. We'll come to you in a bit. We have Mitesh Thakkar and Sudarshan Sukhani joining us now to help us with the day and the week. Gentlemen, morning to both of you. Sudarshan, let me start with you. What's the outlook on the index?
Well, good morning, Sonia. The outlook for the index is the same. The market is in a strong uptrend, and we are all in a trend which is now classified as a bull market. New highs have been made. Now, within this bull market, we will see dips. We will see some intraday declines. That's normal. That's not something unusual. So for today, the view is that if you see a minor dip in the market, buy it. It's not an intraday trade. Carry the position. Your stops are 18,400. Till then, just be on the long side. But the Bank Nifty is a different story. It's went into a huddle. It's a trading range of almost 15-20 days. So it's best avoided.
Okay. Mitesh, how about you? What would the Q be? Is it largely, once again, focus on the mid-caps, focus on individual stocks while the Nifty remains in a range? Or do you think this week could be different?
Morning. My initial idea is what you suggested as the first scenario. Basically, focus on the stocks, the breadth. And the indices might still yet contract. I think, Nifty for me, I think 18,650 and then 18,770 are two pivot points, which on the upside would be difficult for the index to strongly get past immediately. While on the downside, 18,500, 550 zones is unlikely to be taken out. So I think it will be a 250, 300 point kind of a range for the Nifty. The Bank Nifty similarly, 43,800, 43,500, very good support levels. And 44,500 is important pivot on the upside as the supply level. So it's about a 1,000 point kind of a range on the Bank Nifty. Having said that, I think we'll focus on the stocks, but on the indices, I think assuming, and I believe that the medium-term trend is on the upside, if we get to the lower end, we might venture a short-term long-side trade.
Okay, all right. Hi, good morning, gentlemen. Mitesh, you go first with your picks. What do you have for us?
Morning, Nigel. I have three buys to a sell. On the buying side is L&T with a stop at 23.44, targets of 24.05 here. Manappuram is a buy with a stop at 115 half for targets of 122. And the third buy call is on NTPC with a disclaimer that I have call option positions over here. That's a buy with a stop at 180 for targets of 190. While Chambal is a sell with a stop at 279 half for targets of 262.
All right. And Sudarshan, how about you?
Well, Cipla is a buying opportunity. The stock is already in an uptrend. In fact, a lot of pharma companies are doing the same thing, having slow rallies and rising. So Cipla is a buy with a stop under 950. IDFC First Bank is my only intraday short. This stock is now suggesting that the big rally is going to enter into a correction. It's an intraday short with a stop above 73. Balrampur Chini is a buy. It was in a range for almost 2 weeks. It's broken out of that range. So that range breakout is a buying opportunity. Stop under 387. And finally, HDFC, which has been doing almost nothing, is suggesting that perhaps there's a small rally coming. This is a chance. We'll have to find out. It's worth buying into with a stop under 26.29.
All right, gentlemen, thanks very much, Sudarshan and Mitesh. Chandan Taparia is with us, derivative and technical analyst at Motilal Oswal Financial Services. Chandan, good morning. Good to have you with us here. What is your sense, Chandan, as we start a fresh week? Thursday, Friday, a small 1.5% kind of pullback. Are we entering a bit of a consolidatory zone or right back higher?
Good morning, Prasad, Sonia. Thanks for having me. So, talking about Nifty, we witnessed a small profit booking, but major trend of the market remains intact. Recently, in last 2-3 days, we were finding hurdle near to 18,676, but major support is intact at 18,442 marks. So, we believe that some sort of consolidative move could be there in between 18,442 to 18,676. And if 18,676 is surpassed, then we cannot miss the move towards 18,888 to 19,000. So I'm closely watching 18,676 as a key hurdle. Till it remains below the same, let the market consolidate and be in a broader range. And above that, be ready for the next leg of rally in the market. Talking about the data setup, India VIX is near to 11. So lower volatility is not giving any panic and clearly indicates that declines are likely to be bought. Supports are intact, or PCR is holding at lower zone with put writing. So that is indicating the base of the market is shifting higher, even after some consolidation and correction of last 2 days. Now talking about Bank Nifty index, here we have seen some consolidation breakout. Couple of days back, it hit the new lifetime high, but now holding near to 44,000. So 39,750 is the key hurdle, key support. Until it holds, some decline could be bought for up move towards 44,444. So 39,750 to 44,444 is the range we have to play in the Bank Nifty for some consolidative nature of next couple of days. Now talking about stocks, positive on the Apollo Tyre. In fact, most of the auto ancillary stocks are doing well. And Apollo Tyre has given a fresh consolidation breakout with a decisive hold above 400 zone. It has surpassed a key trend line, and put writing with built up of long position clearly indicate fresh leg of rally. So recommending to buy with support of 393. The stock can head towards 420, 425 level. Second trading area, that is buy on BL. We have positive on most of the defense name, whether you talk about HL, BL, and other known FNO counter like MTAR, BDL. So here we are recommending to go long on BL. It has surpassed a key hurdle of 115, which earlier used to be the lifetime high, clearly making higher highs, higher lows on the weekly chart, and fresh leg of rally clearly visible on the price setup. So recommending to buy with support of 170 and looking for an up move towards 127 level in the counter.
Okay, all right, Chandan, thanks so much for joining and giving us a view on the index as well as a couple of those trading strategies. Well, time to slip into a short break. When we come back, we'll get to the pre-open rates. We'll also be joined with Mr. Ashok Atluri of Zen Technologies. They won a big order last week. We'll also discuss what's the way ahead for FY24.